Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a live trading room open, the weekly strategy roundtable, where we talk about current market conditions, what to expect short term, what to expect long term, which strategies work, which do not, risk management, right, portfolio construction, rebalancing, and main concepts of trading. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio as Executive Vice President, Head of Technology at Options Express. From its inception, I want to say thank you to all the subscribers. First of all, welcome the new subscribers. Please type in first if this is your first event. A lot of you have been here. Mark have been here many times. Thank you, Mark, and everyone else. I just want to say thank you. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science. Disclosures are important. Please read them. I'm going to go through specific trading examples. Not only do I provide entertainment and content, but I also trade live with real money, real account. So it's very important to understand the disclosures. If you're new to trading stock and options, I encourage you to visit optionscreening.com so you can understand the risk associated with trading stock and options. The market is volatile. It's very important to understand that what are the consequences of volatile markets. I'm not a financial advisor, I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we talk about trading plan, let's talk about current market conditions. That's what we are here for. So PCE data, right? I don't think it was a surprise, right? If you were in the what happened here? If you were in the live trading room yesterday, I did say that most likely it's going to come in worse than expected, right? Or at least in line with expectation, and worse than the last sprint based on PPI data, based on CPI data, based from inflation data in Europe. They're all kind of connected. It did come in worse than expected, right? The expectation was 0.5, came in with 0.6, or year over year expectation 4.4, 4.7, and market kind of fell apart, right? Again, it's the idea. Always, I would not think that, it's not just one news, right? It's multiple touch, right? Just like in marketing, one of the main concepts in marketing is for you to change the behavior of a consumer or to sign up to respond to an ad, you have to see it I think it's the rule of three times, right? You see an ad commercial on TV, you read a newspaper, your friend tells you about Tradespoon, and all of a sudden after 3 times you sign up for Tradespoon, right? So 3 times, or you buy Nike shoes, right? I usually give an example of Old Testament, right? That's kind of an extreme, right? Moses told Pharaoh 7 times to, let the Jewish people out of Egypt, and only on the 7th time Pharaoh decided to do it, right? Marketing, trading works the same way, right? If you say once CPI data is worse than expected, market kind of ignores it. 2nd time, market ignores. 3rd time, PC data comes in. Okay, maybe this is, maybe inflation will stay longer, right? So this is one of those examples. I wouldn't read too much into this data, right? I think it's just continuation of the theme that the inflation is here to stay longer than everybody anticipated, right? It's not a transitory inflation. Interest rates will stay elevated longer. Fed has been saying that for the past, I don't know how long, 12 months, right? Nothing has changed. It's just how people react to this news, right? What is our overall reaction to the news? So what to expect next? Okay, this is all nice and wonderful, but what's next? So what's next? Let's see. I'm looking at the weekly chart, right? So we have pretty steep pullback, basically trading at the same level where we started end of January, right? We had a strong rally in January from 52-week lows, and for the past 4 weeks, we're back to the same level, below 50% retracement. We're below 50% retracement between the August high and June low, and we're trading right at this level to the penny. It's all about interest rates. So QQQ and spiders are, very important and interesting, but they don't drive the market. It's the inflation data, right? I'm still in the camp where bond market is right? And this is a hard landing kind of theme, that the bond will lead the market, bond market will lead the market. Soft landing, you basically say, don't fight the tape, unemployment is low, and consumers strong, people are spending money, manufacturing and expanding, so life is good. So bond market is wrong, equity market is wrong. So I'm in different camp. I think bond market is right. So what does bond market tell us? We are trading kind of a make or break the market, right? Not a very straight line, but we are right at the 52-week high, right? We're right at 52-week high on 2-year yield, a little bit longer dated options. We still haven't reached the 52-week high, but we did break through December high, right? Where the market reached the December bottom. And it's trading above that level. So next week, again, a little bit from 4 to almost 5%, right, in a matter of a few weeks. So a little bit too high, too fast. So the question is, will we break this level, right? Will we pull back? Or will we continue going higher, right? Right now, the expectation that Fed will pause somewhere around 5.5%, right? So obviously, if the rates are continuing to go higher, then the market will continue to pull back. If the rates drop, market will will rebound. Similar price action in dollar, right? For the past 4 weeks, you have a strong move to the upside from the 50% retracement. We're talking about multi-year low and decade high, 2 decades high and 2 decades low. And we bounced off of 50% retracement, broke through the 62% retracement, right? Look, if you look here at 62% retracement, we're still trading above 2017-16, financial crisis in Europe, right? That crisis in Europe, COVID, right? Still trading above these levels in the dollar, right? And the strong dollar is not good for the market, right? So again, do we have this parabolic move up, parabolic move down, right? Do we just go in a straight line and continue going? Or do we take some kind of a break, pull back, and then go, right? So those are kind of the two options. Obviously, if we continue going higher on the dollar, market will continue to pull back. If we do have pullback, right, this is scenario 1, scenario 2, right, then the market will rebound. So let's pause that question, right? So let's look at spiders. We are trading at 50-day moving average. We basically broke through the 50-day moving average on spiders. We are testing 200-day moving average. We pierced through the downtrend, right? This is the downtrend from last year, right? From the beginning of the sell-off. Again, make or break the market, right? We're sitting at the 50% retracement between the August high and pandemic low. Which way are we going, right? One scenario, right? 7 out of 10 times statistically, when you have 50-day moving average crossing 200-day moving average, there is a continuation, at least for a few months. And 7 out of 10 times you have this, right? Going into March. All right, so that's scenario number 1. 200-day moving average holds, right? Sometimes it appears below that, right? You have kind of a false breakout, right? False breakout, but still, whether we have a breakout or false breakout, this is scenario number 1 going into next earnings season, right? This is the most important event. because there's still uncertainty. You know, Jerome Powell said soft landing is possible, not off the table, right? Jamie Dimon yesterday came out and said soft landing is possible. We don't have to be in a recession, all possible, right? So that's scenario number one, right? We're heading higher into April. Scenario number two, 30% of the time, 200-day moving average doesn't hold, 50-day moving average doesn't hold. People are nervous, right? People are talking about volatility Armageddon again, that volatility is gonna just spike because everybody's shorting volatility. And then we basically break through the 50% retracement, potentially breaking through the December lows, right? And in April, we are retesting the 52-week low. Scenario number one, scenario number two. This is not just a kind of a hypothetical discussion, right? Just, you know, for the sake of discussion. I mean, we could just be discussing this for the sake of discussion, but this, unless you're doing day trading, right? If you're day trading, you probably don't care if it's scenario number one or scenario two. I mean, you might, but most likely not. But if you hold in position overnight for a couple of days, couple of weeks, couple of months, obviously this is important, right? Are we at least going back to the January highs, or are we going back to October lows, right? The market can go two ways, right? So that's the question. Are we gonna, by April, are we gonna get close to retesting the lows, or are we getting close to January high and, you know, maybe even, you know, August high, right? Which are close. Scenario number one and scenario number two. So let's talk about scenario number one and two by April. April, May. We usually don't try not to time the market to days or weeks, but April, May, you know, going into summer, where are we going to be? Are we going to be at one, or are we going to be two? And that kind of shit, and that changes everything, right? That changes everything. Okay, so let's say one or two by May or April. Mark, yes, hola, done. Good morning, Faye. Good morning from Denver. Love Denver. Faye, yes. Faye asked a question. We do have live trading room on YouTube. We actually have live streaming also, Strategy Roundtable. Doesn't look like we're streaming today, but okay. But next live trading is March 1st. March 1st, morning session, closing session. So type in the word Tradespoon on YouTube, click on subscribe if you participate in, or if you watch any of these events and you like them, you think they're useful, then most likely they're useful to other people, to other traders. Please like, you know, you watch the video, you like it, you like the way, you know, I look, or, you know, if I lost weight, then please share it with your on the social media, right? If you're part of the forum, if you're part of any social media, it will, you know, it will benefit other people. It will benefit our marketing effort, and that'll be greatly appreciated. Plus, we're getting close to 1,000 subscribers. So please, please, please join our YouTube. So thank you, Faye, for the question. Antonio, PC, so the question was on PCE data. Should it be going up or should it be going down? PCE is the gauge of inflation that Fed is watching very carefully. It should be going down for the market to go up. Because if it goes up, right, if it goes from 4.6 to 4.7, or months over months, it's going from 0.5 to positive, that means inflation is here to stay, right? And Fed, number one, two goals, right? Low unemployment and price stability when it comes to prices, price stability across goods and services and wages, right? And when inflation is going high, there is no price stability. Do you still see QQQ going to 267? Well, that's the question, right? We're discussing that. Let's see, 267. Oh, QQQ 267, QQQ. We'll talk about QQQ. I mean, the SPY is the same. So, okay, so one or two, did we answer one or two, Antonio? If the Fed rates increase, does this have a direct effect on 2 to 5? Yes. If the Fed fund rate expectation, if the expectation of the Fed fund rate continues to go higher, right now it's 5.25. Now everybody's talking about 50 basis points, right? I think 2 days ago, probability of 50 basis points in March was 1%. Now it's 30%. Probably by the end of this today, it'll be at 50%, right? So now everybody's talking about 50 basis points. So expectation of the Fed fund rate will influence the entire yield curve. And obviously short-dated options more than so. Done. Okay, done. Mark, 1. Anyone else? Anyone else? 1. Okay. We have a lot more people than just that. Let's see. Abraham, Alvaro, Antonio, Carl, Cass, Clayton, Don, Dr. Dow, Faye, John Paul, Luis, Michael, Patrick, Peter, Robert, T, Victor, Vitus. 1 or 2? Any question? Any idea? Okay, more ones. Okay, nobody said 2. Okay, good. Everybody said 1, and I agree with that. So my answer is also 1. Purely statistical analysis. I don't have statistical analysis, trading psychology, right? Nothing has really changed. It's just months of January, right? I mean, if in February inflation is again hotter than expected, right, and we have still economic data, potentially 2 can occur. I mean, it's not off the table, but if I have to guess, I would put 60% confidence that we're going to get to 1. And here's 40%. Not a lot of conviction. I don't have a lot of conviction because this doesn't look good, right? This doesn't look good. Everything is in red. But I still think we did, the bottom line that bulls were able to break the downtrend, which I didn't expect. They were able to break the downtrend. There is still a high probability of soft landing, right? The narrative hasn't changed. Unemployment is low. Consumers are spending. Manufacturing data came in better than expected. Services data came in better than expected. There's some movement in mortgages, right? Even though now it's on pause, but at least for the past 2 months, we had some movements in, housing activity. So, I mean, soft landing is not off the table, right? 1 month doesn't throw off the entire picture, right? So for that reason, I think it's 1. Obviously, if February, if March, we still have this inflationary data going up, and all of a sudden Fed decides to raise by 50 basis points, well, then it's 2, right? Then it would be 2. I don't think that's going to happen. I think bulls are still in control, and they will be able to defend 200-day moving average and 50-day moving average. For that reason, I'm voting 1. Not a lot of conviction. I mean, you can see how does it affect my portfolio rebalancing? I am proposed to be market neutral right now. My proposed market neutral. To me, this means that you should not, on average, you should have 4 positions. You have 2 bullish positions, right, and 2 bearish. And you can see even today, I'm closing some of my bearish positions today, right? And probably by the end of the day, I'm going to add to my bullish positions, right? Because I think market is oversold. So in the past 2 weeks, I went from being bearish to being more and more market neutral. For every 2 bullish position to bearish, because I think we can get to 420 or at least 410 very quickly. I also realized that 200-day moving average might not hold, and we can get to 380 also very quickly, right? By end of next week, we will have the answer 1 or 2 by end of next week. If Friday we are below 380, right, then okay, it's 2, right? And if Friday we're above 200-day moving average, well, then that's 1. Right, very important level. So that's fine, 1 or 2 March. That's kind of makes sense. Let's talk about a little bit further. Right now, with 3 months, let's talk about September. I'm going to talk about September. All right, soft landing narrative. We are gonna at least get to August high or even higher, right? So this is a soft landing narrative, right? By September, we're at 1. meaning inflation is going down. This is just a misprint, right? One data point doesn't make sense. And then starting March, April, inflation continues to go down, unemployment continues to stay low, manufacturing data continues to expand, and people continue to travel and, reserve Airbnb and soft landing, right? Soft landing scenario one, we're somewhere between 440, 450 and 430. Scenario two, 1 month we have inflation going up, 1 month we have inflation going down, and we're basically trading somewhere between 350, right? 52-week low, right? Still soft landing, but not as soft as everybody anticipates, and between 430, right? Or up, down, up, down, up, down, up, down, right? Scenario number two. So this is maybe a soft landing dash no landing. This is maybe soft landing slash hard landing. We're still fighting, nobody knows, right? There is no signs of inflation, right? There is no signs of recession, right? If Q1 earnings come in April and they're similar to Q4, right, where there's really no clear cut, right? There's no evidence of recession, right? Right now there is no evidence of recession. There's some forward-looking indicators that might indicate, or like inverted yield that usually follows, or leading indicators for 10 months aren't down. So there are signs that recession might be coming, but there is no signs that recession is here, right? So then we're stuck in this soft landing, hard landing narrative between 430 and 350. And the third scenario, we are breaking below, right? Hard landing, meaning that we do have a recession, and there's signs of earnings recession, right? Next time when Apple and Microsoft report earnings, it's going to be worse than Q4, right? Q4 was pretty bad, but market kind of dismissed that. But in Q1, it's going to be even worse than Q4. And then if there's a signs of recession, more people are letting go, margins compression, high wages, and blah, 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 recession, all right, recession. So scenario 1, 2, and 3, by the months of, let's say, September, October. How many of you say 1, no landing? How many of you say 2? Well, no, nobody knows, right? We're just going to be stuck in this range with mixed data points, right? Like we had in January, February. Right? December was one of the worst months. January was one of the best months. Now February is again one of the worst months, and we're just going to continue having these worst, best, right? That's 2. And scenario 3 is, there'll be more bad data than there'll be good data in terms of recession. Scenario 1, 2, and 3. Let's pose that question to the team. Market seems to move on. Can you bring up the Dow? What is your viewpoint on chart? Antonia will go back. Yes, let's see 1, 2, and 3. Victor, 2, 2, 3, 5. I love Kevin. Kevin, you're the best. 5. I didn't put 5. And if you're Kevin, somewhere 5, somewhere, Armageddon is coming. Right, we're going to 0. Okay, love it. Okay, so nobody said 1. Okay, that's interesting. Nobody said 1, not a single person. Okay. Usually what it means, be careful, right? It's always like that, right? In January, when I posed this question in January and we were here, there were a lot of 1s. Same question, a lot of 1s. Probably most of you were at that webinar in January. Today, nobody said 1. So be careful not to chase the market, right? Kind of this herd mentality, right? Where you're following the tape, right? And the tape goes up, you're buying, tape goes down, the selling, but you're always the last person in line, right? Very hard to trade like that. I proposed you're in one camp or the other camp, right? Soft landing or recession. You might have to reevaluate every quarter which camp you want to belong to, right? But you start the year with the idea market is going to be at certain data point, right? It's going to break 52-week low, or it's not going to break, and then everything follows, right? At some point, obviously when the downtrend was broken, and I was wrong, right, that we broke the downtrend, I had to go back to the whiteboard and figure out, like, okay, do I have any data to support for me to switch to a different camp? And the answer was no. Right, just like the answer is not really no right now. So just something as an observation. I am going to go with 3. I know we have 2s, right? Half people say 2, which reflects the, if you ask 100 professional traders, if you ask 100 market makers, if you ask 100, money managers, 100 economists, you're going to get the same answer. Half of the people say soft landing, half of the people say hard landing, because we don't really have a clear cut. And that's what makes this whole business exciting, interesting, but also, obviously a lot of uncertainty, So I am going to go with 3, right? Very basic principle. I think as long as interest rates are higher for longer, finance 101, companies cannot grow, right? Their earnings growth will decelerate. It's already negative in Q4. It will be more negative in Q1. It will be more negative in Q2. And if that's true, we're going to be in recession, and unemployment will tick up, and market will collapse. Not collapse, but market will pull back significantly. So that's my rationale. Again, it's the interest rates, right? If 2-year yield, if money market is going to yield 5%, very simple. Like, why even take the risk, right? S&P on average returns 7%. Money market pays you 5%. It's guaranteed. You're guaranteed to get 5% for at least next 12 months. Why would I put money into equity market, right? That doesn't make any sense to me. And a lot of people feel this way, right? A lot of people feel this way. So the longer money market yields 5%, the longer, people are going to shy away from the equity and rotate into the money market funds. All right, now let's answer some of these questions. Sorry. Do you still see QQQ going to 267? QQQ. The question is time, right? This is a trader's market. Hopefully now you appreciate that in 1 month we go up 20%, the other months we go down 20% or 10%. It's a trader's market, right? You have to at least attempt to time the market, right? At least attempt to time the market. So will QQQ be to a 267? I think so. Yes, I strongly believe. The question is when. When, I'm a little bit, I said we're going to be there by March, right? I said we're going to be at 267 or 261 by March. I mean, it's not the end of the March, so I could still be right, but I think my conviction is a lot less than it was in December, right? So we will be. The question is time. As of right now, I don't think we're going to be at 267 before April, right? I think by June, right? So I think 267 will be by June, because I think the price action, we're testing 200-day moving average, pendulum swings to extremes. We can retest 50-day moving average, maybe even this downtrend line, but still get back up. Potentially, this is probably the top. If I have to guess, this is the top for the rest of the year, right? I don't think we might get to 320. We'll see, but more likely than not, this is the top, and we're not going to get to, even in December, we're still not going to be here. All right, we're going to be somewhere in here. So I think we go up March, April. Next earnings starts. It's not as good as everybody anticipates, and we trace down. Then we have a pattern of lower highs and lower lows all the way to October, right? Because September, October is probably where the peak of anxiety or uncertainty, and then November and December we start this strong rebound. Because by November, December, I think inflation will be down, right? A lot of bulls will be flushed out of the market, and interest rates will then start dropping next year. Market will anticipate this, and then November, December, that's when the rally will start. So I don't think the rally started in January. I think the rally will start in November, right? Just a little bit off on timing. So that's my view on technology, spiders, and everything else follows, right? There will be very few exceptions. Market seems to be moving away from technology stocks. Can you bring up the Dow? What is your view on the Dow? Same opinion. I am not in the camp, right? It's kind of if you listen to news, it's kind of a madhouse, right? in December, basically, in December, everybody says Dow, right? Stay away from technology, right? Stay away from technology. Technology is going to underperform, but your Dow stocks, right? They're going to continue to rally. Okay. Can you guys still hear me? What happened? What happened? Let's see, is the audio still good? Audio. Okay, audio is still good. Okay. So in December, right, the most popular opinion on TV or on Twitter by soft landing team, soft landing guys, in December basically said that will continue going higher, right, this year. Right, this is a soft landing narrative, but QQQ is going to underperform. Then January start, everybody was very bearish, and then technology rally. And then Dow Jones underperformed, right? And everybody said, well, sell Dow Jones, buy technology. Again, it depends who you ask. Just remember that most of the contributors on the news or on Twitter, going back to the game theory, you have to understand what are they doing? How do they make their living? If you make your living managing others people's money, you have to be invested, right? I have money in different, banks, investment banks, right? Goldman Sachs, UBS. Try to raise any cash in any of these institutions, right? If you're invested with UBS or you invested with Goldman Sachs, if you want to raise any level of cash, forget 30%, even 10% cash, they look at you like you're crazy, right? What do you mean? You're trying to time the market, you're going to miss the opportunity, and blah, 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 right? So because they make money, right? You have all your money in cash, they don't make any money. If you have all your money in equities, they make money, right? So that's the narrative. I'm not in that narrative, right? In my narrative, we are hard landing recession, right? Everything sells off. Everything sells off. I do believe that Dow will outperform QQQ, right? Because there is still Dow Jones stocks are trading at low multiple. They're paying dividends. Today, if you turn on CNBC, it'll be a different narrative, right? Yesterday, everybody says buy Google because it's oversold. Today, the narrative will be, buy JP Morgan and Deere. I don't think that's the case. I think we will revisit the lows. It's way overbought. And we're already retesting December lows, right? We're already retesting December lows. It's just a matter of time. This is most likely is the top on Dow Jones. So we might have an attempt to rally. And then when earnings come in, we will break this level, right? And once we break this level, well, it's going to be, similar move up, similar move down. Does it start April 15? Does it start July 15? We have to wait and see. It all depends on the earnings season. When is this pullback going to start? Yes, what do I think about natural gas? Natural gas is in trouble, right? Much warmer, right? Global warming, even though it's 20 degrees in Chicago right now, but average temperature is much higher. I didn't have to clean the snow this year at all. Like maybe once my friend came in and cleaned, I didn't even, I usually have a snow machine that cleans the snow. I do it myself. I really like it. This year I didn't do it a single time. And same thing in Ukraine, same thing in Frankfurt. So gas collapsed. We're entering, there's some seasonalities, but I don't trade gas. I think it's extremely unpredictable. I know it's fun. It's very volatile. We all like these elevator up, elevator down move. My opinion, we're entering the recession. People are going to need less oil. People are going to need less gas, right? Also not a very popular opinion. If you talk about crude oil, right? I mean, very few people said, very unpopular opinion, right? Crude oil should be at 100, right? Everybody says, Goldman Sachs says, Morgan Stanley said, everybody, China is reopening, we're going to have $100. And right now we're at 75, right? I think we're going to drop below 60 this year, right? Or below 50 this year, because it's all about soft landing or hard landing. 100, China has to be in expansion, right? The only way China is going to reopen and expand if, you know, somebody buys Japanese, you know, Chinese products. That's United States and Europe. If United States and Europe is in recession, China is not going to go that far, and crude oil is going to drop below 70. Not the popular opinion. If you ask 10 people on CNBC, they're all going to say, no, 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 Vlad, you're crazy. 100. Yes, 100 only if it's soft landing. Otherwise, no. So that's the same opinion on natural gas and oil. Eventually, I think oil will rally, right? But we have to reach that bottom in the market. So oil will be at 100, but probably not this year, probably next year. Probably next year, assuming inflation will actually start dropping toward the target rate. Christmas fixes everything. Got it. All right, yes, thank you. Kevin, okay, so do you agree that the market doesn't hit low until after the hikes stop? I think market is a good indicator. You know, my personal opinion, hikes will stop, right? Because there will be signs of recession. So right now we are, you know, we're kind of continue to make new highs. I personally don't think Fed will change its course, right? Expectation is at 25 basis points in March, 25 basis points, whatever next meeting in May and June. So I think there's 2 or 3 25 basis points hikes, and that's general expectation based on the futures data, right? Demand and supply for futures data. So I think Fed will stop hiking somewhere by June, let's call it, right? Another 50, 75 basis points, 5.25, 5.5 Fed target rate. Then they pause, they stop, and then they observe. And I think what they will observe is that earnings deteriorate, unemployment is ticking up, inflation is persistently high, so they're not going to pivot, you know, this year, but they're going to just keep a steady rate, right? I don't think rate is going to 6 or 7, right? And I think market will reach the bottom sometime between now and October. So that's my view on the market. All right, Kevin, thank you for global more. All right, let me know if you guys have any questions. You guys been awesome, of a lot of participation. Okay, how do we help at Yellow Tunnel, Tradespoon? How do we help you at Tradespoon? So we do have elite service, right? We do have elite service. First of all, another thing that let's talk about elite service. Don't trade alone, right? Become part of community of traders. Hopefully it will be Tradespoon, but you know, if you find other community that gives you information based on, you know, your trading style, which is fine, but don't trade alone, right? Join the YouTube channel. You can do it for free. We have live trading room every morning, and you know, first hour of the opening session, last hour of the closing session, and you can ask questions, and we will help you, guide you through trading, because the most important, you know, you see it basically everywhere, every email, every Twitter, every news, you know, it's right now we're in the traders market, and successful traders, when they get into a trade, they think about risk, how much money they are risking. Amateur traders, right, beginner traders, think about how much money they are making, right? It's natural tendency. That's how I was. When I was young, I was excited, you know, I always like to trade options. I started trading. I didn't care how much money I lose, right? You only live once. You think about how much money you're going to make. I do believe that to be a successful trader over a longer period of time, your first thought has to be, how much money am I risking, right? And then you think about how much money am I going to make. So you do have to rewire yourself, right? We're not wired that way. Everybody has different personalities. I'm going to say majority of the people, or people that have similar personality that I have, first think about how much money they can make. And they either don't think about how much money they can lose, or they think about it when the trade goes against them. So before you get into the trade, I encourage you to keep a journal and ask yourself first question, how much money am I willing to risk to get into this trade? And how much risk do I have across my whole portfolio? Because you might have very small risk in one position, but if you have 20 positions or 10 positions, then there is a lot of risk. So the key to success is risk management, right? So that's what we help you every day in the live trading room. That's all. I start conversation about what is my target gain, what is my stop loss, right? Let's say you want to buy QQQ, Tesla, Microsoft, Apple. You can see today they're all trading the same way. It's not like, I mean, sometimes there's exception, but it's not like Tesla is up 5% and Microsoft is down 2%, right? Google down 2, Apple down 2, Amazon down 3, Tesla down 3, some kind of multiple, but they're all move in the same way, right? And Goldman Sachs is down, Morgan Stanley. Well, maybe they're not down as much as Amazon and Tesla, but tomorrow they might be down more, and Tesla and JP Morgan will be down less. So let's make an assumption that they all move in the same tendency. So when let's say you basically say, Vlad, I like your reasoning, right? Okay, I think 200-day moving will hold, maybe even 50-day moving will hold, right? Somewhere in this, I'm going to start buying, right? So I'm going to say, okay, I'm going to buy QQQ. The first question on your mind, right? Your first thought is, I think it's going to get to 310. I can make, 8% return, right? Very quickly. That should be the second thought. The first thought, at what point do I want to exit this position, right? You might say, listen, well, if you're doing day trading, maybe 200-day moving average, but at least say 50-day moving average, right? If we drop below, I mean, you have a lot of support here, right? October high, November high, and then 50-day moving average, right? So you can say, listen, I'm willing to risk maybe, well, that's, at least let's do 10 points, like here. If it drops below this line, right, this is the line, right? This is that support level. But if it drops below 280, I'm out, right? So what's my risk is 10 points, right? So I'm risking 10 points. Average account is $10,000. I propose not to risk 2.5%. I propose to do dollar cost average or option laddering, where you split the trade at least into two. That means you're risking $250 per position, and you split it into two trades where you risk 1%. You risk 1% in each trade. If you're doing options, maybe you spread it among different strike prices or different expiration months, but you're basically risking $100 per trade if you're managing $10,000. Right, this is what I believe successful traders think about, right? They don't think about, okay, I'm gonna make 8%. They think about, okay, maybe I'm gonna buy at 290, right? 10 points, right? That means I can buy 25 shares. 10 points times 25 shares, $250, right? And then maybe I buy 5 shares here, right? I buy 5 shares today because I think market is done selling off, and next week it's gonna rally off of 200-day moving average. But if I'm wrong and it drops, let's say 285 or gets close to 280, maybe I buy another 5 shares, right? This way, if I'm wrong and this November, December level doesn't hold and the 50-day moving average hold, then we're gonna drop probably to the downtrend, which is going to be roughly 270, right? So if you want to wait till 270 downtrend, okay, then you buy only 5 shares. If you're waiting for 270, if you're waiting for 280, then 25 shares. If you're doing 270, then 12 shares. And you write it down in the journal, right? You write it in the journal, say, listen, I think more than 70% of the time, 50-day, 200-day moving average will hold. We broke decisively above the downtrend. I'm targeting 8% rally, right? I'm targeting 20 points to the upside. But to the downside, I'm not willing to risk more than 10 points, right? Pretty good risk versus reward trade. But you always think about risk, and you do not want to have more than 4 positions, right? If you have 4 positions at 2.5%, right, 10% drawdown, right? Let's say you end up on the wrong side of the trade. right? I actually thought that we're not going to break the downtrend. I was very wrong, right? We actually markets swing a lot higher than I anticipated. Probably most people anticipated, right? Most people did not anticipate technology to rally. Most people anticipated value stocks to rally. So I think most people got caught by surprise. I mean, unless you're in a no landing zone since last January, right? If you believe in no landing last January, then you say no, this is not a surprise. But you were down 40% before this happened. But so the only people that didn't think this was a surprise, if somebody actually believed in soft landing from last January, from the last 12 months. So same thing can happen here. I think it's going to be this, right? But what if it's this, right? If I have 4 positions, 2.5%, I'm down 10%. Am I happy? Not really. There's nothing to be happy about, but I can regroup. I can go back to the whiteboard and decide, do I want to adjust? If I'm down 20%, if I'm down 30%, this is where I get emotional, right? This is where I get emotional, and then usually I'm out, right? Or I take a break, right? I put myself in the penalty box. So the goal is to be down less than 10% on any of the cycles. What do you do with the rest of the 90%? Let's say you trade in options, right? You trade in options, you only have 4 calls. The usual questions to me, Vlad, what do I do with the rest of the $9,000? Well, first of all, don't worry about it. Cash is the king. Second one, put it in the money market fund. Get your 5%, right? A lot of people say, Vlad, you crazy. What's 5%? When I'm going to make $50? That doesn't make a difference. Okay, you might have you can have 8 positions, but if they're down 2.5%, right, and you get caught in one of these moves that happen very quickly, you're probably not going to be able to time them, and you're down 20 to 30% then or more, then it's a problem, right? Most of the time you're just going to stop trading. So from that perspective, having 90% of your assuming you're trading options. Obviously, if it's stock, you're going to be always think about options as derivatives of stocks. You might only have $1,000 in Spiders calls, right? Which is fine. What do you do with the rest of the 9,000? Well, just remember 100 shares of Spiders, right? 100 shares of Spiders. You managing or QQQ, right? 100 shares of QQQ. That's $29,000. So you don't really have $9,000 in cash. I mean, you have maybe according to the rules, margin rules, you have $9,000 in cash. But according to the rules of derivative trading, right, you own 100 shares of QQQ calls or puts, you're managing $29,000 worth of equity, right? And your leverage 1 to 3, right? Leverage is what kills every bull market, right? It's not the inflation, it's not the recession, it's leverage. How much leverage is in the system? And that usually what cause these recessions, and that's what usually causes problem in retail traders, right? It's the leverage. Are you leverage 1 to 3? Are you leverage 1 to 10? Are you leverage 1 to 10,000? And that's a problem. All right. Any questions on Elite Circle, right? So today is Square, right? I did Iron Condor and Square. This is the type of trades I do. I would be market neutral. So if you're trading stocks, consider selling calls against it, Iron Condors, butterflies. I think between now and next earnings season, we're just going to trade up and down, right? We're not going to have strong rally, 10%, right? This rally is behind us. Probably the best of this rally is behind us. I don't think we're going to revisit the 52-week low just next week. I think we're just going to trade in sideways. So market neutral strategies like Iron Condor I did in Square yesterday, that would be the most optimal trade. So for that reason, we have Elite Circle. I do use Stock Forecast Toolbox. I encourage you to consider using Stock Forecast Toolbox. Very accurately identified downtrend, right? It gets rerun every single day. Shows you downtrend. It shows the support at 397. Shows the, let me see, I have delay. Right, 403 is overhead resistance, 397 support. spiders on the PCE data is actually below that, right? 395. So in theory, 395, we're already oversold, right? I would not chase the sell-off, but if we do have a bounce back to 400, 403 level, this is where I would go short. Because model does see potentially reaching actually 380 level in the next 10 days. I don't think the model is right, but you know, unless something happens in the market, what do we have next week? Who can save the market next week? Let's see. Not this, not this. ISM data, right? On Wednesday, manufacturing data comes in, right? Just like we had PMI manufacturing data, it came in much better than expected. The market actually sold off because of that. This time it can actually rally, right? Because it's no signs of recession. Market is oversold. Let's start buying, right? So, you know, by next week we could actually start the rebound. All right, any other questions? So that's Stock Forecast Toolbox. You know, it gives you kind of the trend analysis and support and resistance levels, right? I do have sometimes ticket people say, Vlad, you said 380 and we only reached 390, right? We only reached 390, we never reached 380. Model doesn't guarantee what's going to happen on what day. It just shows you here's the current trade and here's what you can expect to happen. You know, 70% of the time. So 70% of the time there might be a continuation. We might drop to 380, but you know, 30% of the time there is a rebound. You know, if you look at traditional technical analysis, 70% of the time 200-day moving average holds. I mean, 30% of the time it doesn't. What ETF are most likely to benefit from possible slump in market? Well, inverse ETF, you know, so part of my positions are SH, right? If market continues to sell off, inverse ETF like SH is going to continue to rally. UUP, dollar. If there is a market sell-off, dollar is going to continue going higher. Stop loss, yes, Kestan. Secret agent throughout the history below mind. Thank you, Kevin. Antonio, have the Antonio, yes, we do have a. So the question, if you have subscription to, why is nobody? Okay, if you have a subscription to Morning Bell, how is it? How much it is to the upgrade to Closing Bell? Do me a favor, open up a support ticket. We have to look at your history, what subscription you have, how much you've been paying, and we can always figure out how to adjust your current subscription to Elite subscription. So if you're already paying for the Morning Bell and you're just looking for the Closing Bell, the best thing is just open up a support ticket. Just say, I talked to Vlad during Strategy Roundtable. He said that you can adjust my subscription to Elite. How much is it? And they will look and they'll tell you. Done. Thank you. Have a great weekend. How do we use company screener data? Good question. So again, in the bull market, sectors matter. Sectors do matter. In the bear markets, I don't think sectors matter. But you know, Company Finder is a great tool. It basically says which, you know, you look at this and using the same model, it basically tells you which sectors you should invest and which sectors you should probably stay away. Aerospace and defense, right? Lockheed Martin, NOC, probably one of the main sectors, and energy, right? Or energy, oil. Okay, it makes sense, right? So if I want to know which sectors to invest, right? If I need to put money somewhere, right? I don't want to be in cash. You know, I would consider investing in aerospace and defense. I would consider investing in energy, and you can drill into these names and basically see some of these stocks: Boeing, Lockheed Martin, NOC. So that's how you would use these sectors, right? You want to see as the data gets rerun every month. It looks at the long-term trends and it basically says aerospace and defense, strong uptrend. You know, your energy, your Chevrons, you know, your British Petroleum is in strong uptrend. And you can kind of see it, right? If I type in BP, I mean, it looks pretty strong, right? It looks pretty strong. Victor, thank you. Martin, I'm sorry. All right, Kevin, thank you. No, only Wednesdays is live trading room. So this is kind of just an idea to get you into our community to watch. But if you want to watch every day, you have to sign up, to one of these services. Either Elite if you want to see morning bell and closing bell. If you just want to see morning bell, then which service is morning bell? Only morning bell. This live trading room. So you can sign up for live trading room, open up a support ticket, and we'll let you know which services gives you. We have Vlad's portfolio, we have premium portfolio, and you can get access to live trading room. Thank you, Faye. Yes, always love your perspective. Thank you, Cass. All right, you guys are awesome. Again, very important to have different perspectives, right? Very important to listen, right? If you're in a hard landing camp, like I am, I always listen to soft landing, because I might think they are wrong, but I want to know their point of view, and maybe at some point I need to switch, right? So it's important to listen. It's important to be part of the community. It's important to not to trade alone. In our live trading room, we have a lot of traders of different experience level, and I think you will benefit tremendously. All right, have a great weekend. That's all I have for today. Thank you very much, and I will see you hopefully at the closing bell or Monday. Antonio, where do I open the ticket? Here, you can go to chat now and just talk to one of our product managers, or you can always click on contact if you just want to submit a ticket. So contact, you can schedule consultation, you have your chat, you can chat. We try to, we take customer service very seriously, right? So we're always there for you, right? Support ticket within 24 hours, you'll get an answer. Live chat during market hours, you should get an answer immediately. Not immediately, but within a few minutes. Victor, have a great weekend. Thank you. You too. Faye, have a great weekend. You too. All right, Kevin, thank you very much. Appreciate it. All right, guys, have a great weekend. Thank you. You've been awesome. Thank you for participating. That makes my day. Please continue to participate, at least in the free events, right? If you obviously join the live trading room every day, you'll see me every day. If you don't want to see me every day, then YouTube or Friday Strategy Roundtable. Thank you very much and have a great day.